So today's market was possibly the pivot point that I have been looking for a month and some days now. September was not a great month. I think it was detected in my voice when I was in Savannah early on. Wasn't really confident, and I should have known something at that time. But I weathered through it, and we're here today where the market pivoted, but most importantly, the US dollar broke its upward trend line and got down to that 94 mark, which is important because when the dollar goes down, the S&P and stocks go up, and that's good. And so that break today and that close below that trend, I believe, is the signal that we will now start a move higher to possible all-time highs, hopefully by the end of the month and into November. So how do you use the dollar as an indicator of where you should be putting money to work? Well, for the last month and a half, actually 17 months or so, the US dollar has been on a whirlwind ride around driving the S&P higher, then of course lower. If you look at the last month and a half in particular, commodities, energy has done really well. Uranium has done very well. And as the dollar rises, which is a form of inflation, the cost of those goods go up as their underlying companies that represent them, like the Exxons of the world and things like that, keep going up and make new highs for the year. And as the dollar continues to value upward, those do well. Now, as the dollar starts to devalue, will we see those commodity type items go down? And will we see a little bit of a tapering in the inflation story? As you can tell, I am not in Florida this time. I'm actually here in Crested Butte, Colorado. My wife and I are out here for the month, and we're hanging out and hoping to do some mountain biking. You know how you plan, hey, it'll be a great month, it's an off season. They call this the shoulder seasons. It's where people aren't here as much. Cost of coming here is cheaper. But the gamble is the weather. So I wanted to do a lot of mountain biking and hiking. And for the last 2 days, we've been inside watching it snow, which is actually really cool. But it's like 30 degrees out. So typically fourth quarter is when a lot of returns are made up or made for a lot of big institutions. So you get behind and then you start scrambling that fourth quarter of the year, and you're scrambling basically to keep customers, keep clients, and you start taking on more risk as a money manager. Well, now that we're in the fourth quarter, we've moved through September, which was a pretty hefty month for the S&P, and now you're seeing the dollar breaking down and breaking through that trend line right around, I think, 94.15, 94.50 or so. No, excuse me, 94.15, 94.20. 94.50 was, if we broke through that, we'd be in a lot of trouble when it came to the S&P and stocks in general, because that move over 94.50 would inflate costs or goods and commodities and that kind of thing, and makes us not as attractive when it comes to exporting items and stuff like that. Whereas if we devalue the dollar, as we have seen over the years, we become more attractive when it comes to other countries and outside, companies in the world buying our products and services. So, when you see the US dollar drop, typically real estate becomes popular amongst foreign entities, and you see that happen throughout the years. So as we go through this, hopefully, in my opinion, breakdown of the dollar, and I know that's not great from certain perspectives, but it provides us the opportunity for equities to go higher and for us as investors to profit from it. The other breakdown we saw was in the VIX. Now the VIX is the volatility index of the S&P 500, and we broke through 19 today. So the VIX is one of those big indicators of the S&P 500's volatility, and over the last month and a half it's been really sustained over 16 and above 17 or so, and up as high as, I believe, in the 24 range. Well, when the VIX goes up higher, creates more volatility, and the S&P typically goes down. And so what we're seeing is now, as the dollar breaks down, the VIX is now breaking down, and we saw a little bit of that today. And hopefully the VIX will continue to break down and go below 16 into the 15, 14, 13 range, and the S&P will go higher and higher and probably hit all-time highs because of that. But in the last month and a half, the VIX has had really a hard time breaking below that really 17 mark for the most part. It gets down there and then makes a move up, S&P comes back down. So these are things I'm following. It's what I'm keeping an eye on. I'm encouraged today because the dollar broke below trend. The VIX broke below, which is great. It's starting to break below its short-term trend, and the S&P closed higher for the day. So I'm pretty stoked about that. We'll see. I don't know exactly. I did put on a little bit of a hedge against my S&P positions because just in case, if we do see a bounce down to the 18, low 18, 17 range on the VIX, and the dollar comes down a bit more, and then bingo, goes right back up, and the S&P 500 comes back down. The number I'm really watching on the S&P 500, and in my case, SPY, which is the ETF of the S&P 500, is, what's that, 440, 445 is sort of my target. If we can break above 445 on the S&P 500, then we've broken that downward trend that started early September. Until then, everything's questionable. And that's how I'm approaching this. It's all questionable. And so, with that said, keep your eye on the ball. As my buddy taught me this past week, I went on a canoeing trip down the Green River in Utah. He said, you always got to keep your eye on the river, because the minute you take your eye off the river, you'll end up somewhere where you don't want to be. And that's the same way in these markets. Keep an eye on this. Keep an eye on what influences the movement of the equity markets. Don't take your eye off. All right, take care, live loud, and as I walk through Crested Butte and it's snowing on me, I hope you're warm and I hope you're having a great time. Live loud. Peace.